Welcome back to Your Average Investor. If you haven't already, please hit that subscribe button. Today we're going to be talking about GameStop and if it's a good time to invest or not. Now, almost anybody who watches this video is going to be familiar with meme stock mania that happened a couple years ago where GameStop surged from like $2 a share. Well, this is I guess there was a stock split recently. It went from like $2 a share to almost $500 a share. Post stock split, it shows up as 64 cents to $120 a share. But if you were there at the time, it was about $2 to almost $500. And then there was this 4-for-1 stock split here. So, what exactly has happened since then? And with this recent activity in GameStop, if you take a look here, GameStop recently had this big surge from down at about $10 a share, came up to 12, and then after a brief rest back down to 11, surged up to almost $18 a share, and now we're sitting here at $14 a share again. So, begs the question, is it time to invest in GameStop? And a lot of that depends on what your risk tolerance is, of course, and what you believe about the company and what you're trying to do here. There's two different people that are going to be investing in GameStop right now. One is the actual investor who sees value in the GameStop proposition and wants to buy GameStop as a long-term hold because they see price appreciation happening over time. The second is the trader who says, you know what, looks like maybe we're about to be seeing a big surge in GameStop again because, you know, it's a meme stock, people are going to be piling on with FOMO, and maybe I can snag some shares here at $14, and then when it pops back up to 15, 16, 17, maybe $20, I'll sell and take my little profit and go on. So let's look at it first from a financial perspective. Then we'll get into technical analysis as well as just a general business analysis. So here's GameStop, finviz.com, great place to go if you just want a quick financial overview. Here's a little metrics about the company. This is really nice. Cash per share, almost $4. So that's not bad. If they've got, if their price right now is $14 per share, $4 of that is just in straight cash per share. The rest is value of the business. Now we've got sales, $5.27 billion in sales here. And their market cap is only $4.27 billion. Now, of course, their sales doesn't necessarily mean that's what they're taking home. As you can see, income here is very, very small compared to sales. $5 billion in sales, only just under $7 million in income. I mean, it's like 98% is going towards expenses and other things. So that's a little bit of that would be a little bit of a red flag to me if I were looking at this from an investment perspective as wow. How are they making so much money top line, but they're not taking a lot of it home? At least they're not losing money though, but they're still not taking a lot of it home. And because of that, price per earnings is just massively high here. Next, though, let's look at the institutional ownership. There's about 29% institutional ownership. That's good. And about 13% insider ownership. So we'll add those together. We'll say that's 42% owned by insiders and institutions. Leaves 50%, 58% of the float for retail investors. And you can see right now that 22% of the float, as it was last reported, is sold short. So 22% people are short GameStop. Well, that's kind of interesting because GameStop hasn't necessarily been performing well recently. So what's this right here? Is this shorts covering? Maybe. This could be shorts covering big positions, right? Maybe they shorted somewhere back here and they finally decided, you know what, it's not going down anymore. This is a good time to cover. Maybe that's what's happening, but if I remember correctly from the news cycles, what actually happened is there was a lot of large whales purchasing call contracts on GameStop options, and I think that might have been a bigger contributor to what started this push, and maybe some of this is a little bit of a short squeeze because of this high short interest here. So that's interesting. Now, GameStop overall, most people know what they do, so let's just talk very briefly about it. They sell games and other related things, right? There's some action figures, gaming consoles. You can buy actual video games, PCs, gift cards, clothing, etc. And Pokemon cards. I think that was a big one that I don't know if they've been doing this for a while, but they do Pokemon cards, collectible things around gaming. So it's interesting, but the trend with gaming is not necessarily to buy physical games anymore, but instead to just buy a digital download from Steam or the Microsoft Store or something like that, and then you just have the download in your Steam account, and anywhere you go you can download it and play it there. Same with on your Xbox or whatever, so you don't need the physical disc. And GameStop in the past traditionally focused on the physical model, and they're moving towards other things. They opened an NFT market at one point. I don't really know how that's doing. You can see here on their digital store. Right here you can get your digital games, and I think you can also purchase NFTs here. So this is interesting, right? They're making the transition to say, okay, well, digital's the new way to do things. Let's do it. We've got Xbox, we've got Nintendo Switch, we've got PC games, and look, you can even buy with digital currency. So if you think that they're going to succeed in this and beat out or take market share from Steam and from some of the other big players, then this is a really interesting play. It's a really interesting way to do it, right? Maybe now I can create my GameStop account and buy all of my digital games here rather than on Steam or wherever else. So I kind of like the move. I'm not convinced that they're going to pull it off, but I like the move. I think it's a smart move. Now, let's look at just a technical analysis perspective for a second here, right? This is a 1 month chart, so each of these bars represent 1 month since the absolute mayhem where GameStop was at about $500 per share. And you can see ever since then, GameStop has struggled to hit higher highs, which honestly is not surprising. GameStop being valued at $500 a share was absurd. It was, I mean, literally the only reason that happened is because of the incredible short squeeze that occurred. So it doesn't surprise me that what you see here is, this continuously descending wedge, and maybe this is more appropriate like that, right? It's like lower high, lower high. I mean, this is almost there. Lower high, lower high, lower high, lower high, over and over and over. But then, if we zoom in a little bit, we're going to look now at just the last 2 years or so. It seems like we're possibly coming in on a floor type zone, and you could have said that for many of these, right? So this looks like maybe a floor was developing, and then there were some nice breakouts, and then it crashed through that floor, and maybe there's another floor right here that was developing at about $15, $16 a share, right? This looks pretty good. And then it breaks through that down here, comes right back up to it, and now we've been trading at about $10 a share, $11 a share for quite some time, and a sudden burst back up above here. So this looks interesting to me, right? If we're sitting here at $14 a share, then I can see a path back down to $10 a share, $11 a share, right? So I lose $3 per share. If I say I buy 100 shares, I buy $1,400. I'd probably have my stop loss around. I'd probably put mine at $12 a share, so I'd lose a couple $100, and then potential to move up to that nice $15, $18, $20 a share again. Looks okay. I'm not huge into saying when this is going to happen. I know there's a lot of people that say, GameStop squeeze again is just around the corner. AMC squeeze is just around the corner. I'm not a big fan of that, but the risk reward doesn't look terrible. Personally, I probably would not. I'm not currently invested in GameStop, and I personally wouldn't buy today. And the reason I wouldn't buy today is after 2 days of a huge surge, there's been a big drawback. And if you want to look at this on the daily chart, we'll pull up the daily chart here. Here's what happened, right? Opened at $15, surged back up to $17.50, and then crashed back down to now we're at $14. And there's a little bit of maybe a daily base forming before. I could see if you want to trade like intraday today and just do really a quick day trade, buy now at $14, see if you can get it to $15 and just sell at end of day regardless of what happens. I could see that being okay. Based on Friday's day, though, it could also very easily come back down to 13.5, which was the base for most of Friday before moving back up. That's where a lot of the volume was purchased, and so that's where I would guess a lot of the volume gets purchased again. However, this is interesting that it seems to be holding up for at least the last 30 minutes or so, where it's holding $14 or just under $14. Okay, so I could see there being a potential day trade, buying here, selling at end of day no matter what the price is, with maybe a stop loss below the low of yesterday if for some reason it really crashed down, and then hoping that it recovers to maybe $15 a share, maybe $16 a share if you wanted to day trade by the end of day. The other thing I could see again is if we're looking at a little bit longer time frame is, well, this has been let me zoom this back out a little bit. The traditional floor has been closer to $15, so this might be a good time to start accumulating if you missed the deepest dip of the dip, and hope that it moves back up to $20 or so per share, get a nice 33% return there. So from a day trade and a swing trade perspective, it looks okay. I would probably wait to see a couple more days, see if this moves back down to like $12.50 a share. At around $12.50 a share, that's where if I were to enter, that's where I'd start building my position. And then that feels like a better place to sit at if I'm hoping to swing this long term. Now, the other thing that I would probably do if I was looking to buy, if I wanted to buy this today, I would certainly do this, is I would look to sell some covered calls on the contract. So I'd buy 100 shares at least, maybe a couple hundred, few hundred, and I'd look at something like 30 days out. Look at this, 30 days out, call 15, right? So that would be $100 in price appreciation, so from $14 a share to $15 a share, and I could collect about 230. I bet I could get that right down the mid. The bid's 216, the ask is 248. I could probably sell a covered call for about 230. So I'm going to get $230 in premium, and then I'm going to get if I get exercise, I'm going to get another $100. So I'm going to get roughly $330 off of a $1,400 investment. Oops, that's huge. Look at that. So we'll go 330 divided by 1,400. That gives me about a 23.5% return over 30 days, which is fantastic for day trading. Now, the other thing this does, though, if I wanted to buy today and I sold this covered call, is this gives me about This gives me about $2.3 worth in downside protection. So let's say I sell it for $230. That's $2.3 per share, and I'm getting my shares at 13.97 minus 2.3. That means GameStop could go back to trading at 11.67 per share, and I could sell at 11.67 and break even because of this protection on the covered call here. Now maybe I want less protection and more upside potential over 30 days, so I could look at this. This is not that bad at all, where I could, instead of selling a call 15, I could sell a call 16 for $210. So I'm getting almost the same protection, but now I'm increasing my upside potential by another $100. And after that it gets a little bit less protection. Or maybe I want more protection and I'm going to sell it right at $14. I'm like talking myself into this trade as I'm going through this, actually. Like, if I were to buy 100 shares right now and sell a call 16, that's not bad. Now, of course, that looks like it's not bad right now. People could have said the same thing about AMC several times, right? It's like, oh, look at this incredible base of AMC. I'm going to buy AMC here. This was pre-stock splits. This would have been like $4 a share, but now it shows at 44. I'm going to buy AMC at $4 a share, sell covered calls on it, and I'll be golden. And then all of a sudden, boom, AMC now is even post-stock split. Right here's the 10 for 1. Now it's trading at $2 to $3 a share, and so you've lost 90% of your value. So you've got to be careful there, right? So you look at that and say, okay, over the next 30 days, what if GameStop drops to $5 a share, $6 a share? Am I willing to take that loss, or do I believe enough in GameStop long term to say, you know what, even if that happens, I'll just keep buying more GameStop, or I'll just sit on my shares until the price recovers? So that's how I would look at this from a trading perspective. Again, this is not financial advice. This is not specific advice for any individual. I'm simply giving my perspective on what I'm seeing when I look at GameStop. And overall, again, it doesn't look like a bad trade. If I were to take this, I'd probably take it. Like I said, I would buy. If I were to buy today, I'd buy shares. I'd immediately sell a call 16. That gives me plenty of upside with some nice downside protection back down here to about $12 per share, which is about where I was talking about buying in anyway. And the premiums are juiced today. So that's what I would be doing. Thanks for tuning in, everybody. We'll catch you next time.